Hello friends, in this video we will discuss the part 2 of PIB article summary for the date 24th January 2018. These articles are important for RBI grade B and NABARD grade A and grade B 2018 exams. There are two topics for part 2. The first one is rapid reporting system for scheme for adolescent girls, and the second topic is that the government of India has announced details of bank recapitalization and comprehensive reform plan. Coming on to the first topic, that is rapid reporting system for the scheme of adolescent girls. This reporting system is basically a web-based online monitoring system to monitor the implementation of scheme for adolescent girls. This system will facilitate the monitoring as well as taking corrective measures for the implementation of scheme, and it will ensure that faster flow of information, accurate targeting of beneficiaries as well as a reduction in leakages as far the implementation of the scheme is being concerned. This portal or this system has been developed by Ministry of Women and Child Development in collaboration with National Informatics Center. The government has also decided has approved the expansion and universalization of this particular scheme in a phased manner. That is, presently the scheme is being implemented in a selected 508 districts of the country, but in phased manner this will be converted at pan-India level. That is, it will be implemented across India in all the districts by 2018-2019 financial year. So let us now briefly discuss about this scheme. This scheme is a centrally sponsored scheme and has two components. This scheme is basically to empower adolescent girl child and this scheme is more focused on out of school girl childs in the age of 11 to 14 years. It has two components. One is based on nutrition or called as the nutritional component, and the second one is called non-nutrition. This component basically helps to provide nutritional and improve the nutritional and health status of the out of the school girl child, and it provides them monetary help for a number of days per year. Also, it helps to motivate them to join the schools, to join the formal schooling or undergo some kind of skill training under this non-nutrition component. So this component is about skill enhancing or bringing them back to formal school education, and this one to take care of their health and nutritional needs. This scheme is being funded by both central and state governments. The funding pattern is 50:50 for the nutritional component. 50 will be given by the central government and the 50% will be given by the state government. And for the remaining activities, that is the non-nutritional component, the funding ratio is 60:40, that is 60 for central and 40 for state governments. The second topic for our discussion is bank recapitalization and comprehensive reform plan. Details have been released by Government of India. Here bank recapitalization means that recapitalizing the banks with new capital to improve their balance sheets. Because government is the major stakeholder in the public sector banks, therefore it has the highest responsibility to give the capital to the public sector banks in order to maintain their credit lending facilities, to provide credits to different stakeholders in the entire country. currently the public sector banks are undergoing credit crunch, and they are facing the problem of non-performing assets. So they need the capital which is being provided by the Government of India through different means. The Government of India last year announced that it will be giving a infusion of capital to the public sector banks, and it will infuse around 2.1 lakh crore rupees into the public sector banks, which are being burdened by the non-performing assets. And just now, that is on 24th January, the government has now released the details of the recapitalization plan for the public sector banks. For the current year, that is for 2017-18, the capital infusion plan has been that a total of around 88,000 crore will be supplied to the banks, and out of which rupees 80,000 crore will be given by the recapitalization bonds, and the remaining 8,139 crore will be given as budgetary support to the public sector banks. Here we need to understand what do you mean by the recap bonds or recapitalization bonds. These are basically government bonds. Recapitalization bonds are basically government bonds. It is an instrument to raise money from public and from the market with the promise to repay the face value on the maturity date and a periodic interest on the value, on the principal value. So when the bond is being issued for the purpose of recapitalization of banks, so it is then called as recapitalization bonds. So we can say that recapitalization bonds are related to the banks, especially the public sector banks. How these bonds will work is that government will issue these recapitalization bonds, and the banks will subscribe to these bonds from the government, and it will enter as an investment in the bank's books. This investment will be utilized by the banks to lend money to the government for subscribing the bonds, and the money raised by these bonds by the government then will be given to the banks as capital. So instead of it will be rooted like an investment by the banks into the government securities, and this investment from government will come to again public sector banks in the form of capital infusion. It will immediately strengthen the balance sheet of banks and show them capital adequacy in their books. As the government is always solvent, so the money lent by the government for subscribing these bonds is free of becoming a bad loan or becoming a non-performing asset. So it will not put a burden on government coffers, because there will be these are the bonds, it is taking money from the market itself, but yes, it will need to pay the interest payments are to be paid by the government itself. This recapitalization plan has been accompanied by a strong reform package to reform the working of public sector banks in order to strengthen the public sector banks and control the issues of non-performing assets. The reform agenda is aimed at ease, which means enhanced access and service excellence. Enhanced access means to make the reach of banking services to different sections of the society, to different areas of the society which are till now are underserved or unserved, as well as to improve the service delivery, quality of service delivery by the banking institutions. This reform agenda has been prepared based on the recommendations made at Public Sector Banks Manthan that was held in 2017, and it focuses on 6 themes. For example, these 6 themes include 1. Customer responsiveness, 2. Responsive banking, the 3rd one is credit takeoff, the 4th one is public sector banks as Udyami Mitra. This is basically to promote the industries in the country. The 5th is deepening the financial inclusion and digitalization. And the 6th theme for reform is towards developing personnel for brand public sector banks. That is the capacity development of public sector banks employees. So these are the 6 main themes around which the entire reform plan have been formulated. For example, these plans are basically to make responsive and responsible public sector banks. We are going to discuss a few of the points of this reform plan. For example, under the reform plan, there has been a strict watch have to be kept by the public sector banks on their lending and recovery systems, in order to ensure that there is clean consortium loans being provided by the public sector banks with minimum exposure, and it will help the public sector banks to keep in mind that they need to follow a rigorous process for corporate lending in order to avoid non-performing assets in near future. Also, in case of default loans, the PSB will need to initiate stringent loan recovery methods in order to get maximum returns from the loans. After capital infusion, it is necessary that the public sector banks follow the compliance standards. These standards are basically aimed to make the banks strong, professional and accountable institutions. Another step being taken under the reform plan is that the government will not interfere in the commercial decisions of the bank, and there will be continuous efforts to strengthen the bank boards. In addition, there will be theme-wise reform implementation that will be assigned to whole-time directors, and these directors will be encouraged to undertake their allotted theme-wise reforms in their respective banks. Similarly, reputed independent agencies will be employed to evaluate and rank public sector banks every year to make them more accountable on different parameters, which will spur competition and transparency among the public sector banks. Next, we have the government, which is putting a special focus on micro, small and medium sector enterprises. Therefore, it is trying to enhance the credit reach to these sectors in order to spur growth in the manufacturing field. For this, the government has taken the step of Udyan Mitras, which public sector banks will be promoted as Udyan Mitras, and a decision on loan application will be taken within just 15 days with respect to MSME sector, and the GST registered MSMEs will be able to avail enhanced working capital as loan from the public sector banks. So this particular scheme is targeted towards credit flow to micro, small and medium enterprises in the country. Next, the capital infusion for different banks has been done bank wise, and IDBI is the bank which has the highest amount have been allocated under the capital infusion, with amount of over 10,000 crore. The second highest beneficiary is Bank of India, and the third one is State Bank of India. So all these reforms are basically comprehensive in their nature, and along with the capital infusion by the government, the banks need to reform themselves and perform better. This plan addresses the regulatory capital requirements of all the PSBs, public sector banks, and through this plan around 20 to 21 banks are being targeted towards the capital infusion and reforms. This will provide a significant amount towards growth capital for increasing the lending in the economy. Also, the reform and recapitalization agenda is sharply focused for strengthening the public sector banks, increasing lending to different sectors, making the retail customers to transact, as well as significantly increase access to banking services. So this planned comprehensive plan is in very much consonance to strengthen the public sector banks working in the entire country to strengthen the entire Indian economy. So this was all for 24th January part 2. For more videos you can visit www.edutab.co.in. Thank you and happy learning.